Whether you're a trader or an investor, one of the first things you need to learn when you get into the stock market is understanding how to read charts and the basic technical indicators that you can use to predict the action of the price. Today, I'm going to share some of those with you. How's it going, guys? Ryan here and welcome back to another stock market video, and today we're talking about the basics of how to actually read a stock chart and some basic technical indicators that you can use to try and predict the price action going forward. But before we get into that, guys, please remember to give this video a thumbs up. It helps me out so much with the YouTube algorithm. As well as that, if you're interested in seeing more stock market investing and wealth management content, remember to hit that subscribe button and chuck the alert bell on as well. And I'd love to know your thoughts on technical analysis in general in the comment section below. And with that, guys, without further ado, let's get straight into the video. So when we're talking about analysis of stocks, typically we're talking about two different kinds. First of which is fundamental analysis, where we actually analyze the businesses itself and what makes them run, what makes them make a profit or make money at all, the operations, all that generic sort of information with regards to an actual business itself. The second type of analysis is technical analysis, and this is what we're going to be covering off today. And typically this is used by traders more often than not in order to make trades, predict the price action, determine, entry and exit level points, all these sorts of basic things that you need to know as a trader. There's obviously lots of advanced patterns and that sort of stuff, which we're not going to cover in today's video. We're just talking about the very basics of how to actually read a stock chart with regards to, the candlesticks, as well as using some of the most basic indicators that are at your disposal and explaining these against actual stocks. So we're going to do a live demo and make some of our own predictions based upon these indicators. So let's jump straight into the computer and get straight into it. Okay guys, welcome to a basic daily chart here. Each of these individual candles indicate a day's worth of trading. I'm using a website called TradingView, which is free for you guys to use. I've got absolutely no affiliation with them whatsoever. It's just a really good tool to be able to practice your charting. Now, as I mentioned, each of these candles is a day's worth of trading, and just to indicate exactly what they mean, if it's a green candle, it's obviously increased in value. If it's a red candle, it's decreased in value. Pretty self-explanatory there, but explaining the actual body of the candles is where we can gather a bit more information. So this is the body of the candle, this dark bit here, and we can see the wicks of the candle as well, which are these little, I suppose, lines, these tail sort of things. Basically, the line at the bottom, if it has one, indicates the lowest the price got to on that day's worth of trading, and vice versa, the top indicates the peak of what it got to. Now, if we look at the body itself, if it is green, it effectively means that the price opened at this point here and closed at this point up here. And if it is red, it likely opened here and closed down here. And that's effectively the basics of understanding the candlesticks themselves, and you can work out exactly what's going on. Now, down the bottom here, you're probably wondering, these look like candles as well. Well, actually, no, they're not. They are the volume. So this indicates the amount of shares that were traded each day. So as you can see on this day here, where we saw a increase in the price, which went up quite significantly, that indicates that there was a lot of transactions that occurred, and it was mainly buying transactions because it's green, and obviously the candle itself has closed green. You'll notice that each of these indicate effectively the same thing as the candles up here. So if we've had a day where the price has actually decreased in value from the open, then effectively it's going to be red, and vice versa. If it's green, if it's increased in value, then the volume will appear as green as well. So that's effectively the basics of that. So you can see what's happening here actually, just to give you a brief rundown, is there's been a peak, and slowly we've seen a reduction in the amount of shares purchased. And this can be due to, a number of reasons. It could be just due to consolidation, but actually what we're seeing here is an increase in value over time. But moving on from that, on the right hand side, this is the actual price itself. So the final price of the most recent day of trading was $16.37, and obviously on the bottom we can see the dates as well. That's the effective basics of how to read the chart itself. So I'm going to move into some more of the indicators that you can actually use and take advantage of when you are trading or investing, or when you're just looking at charts in general. So the first indicator that I want to share with you guys is probably one of my favorites, and it's effectively the simple moving average, or in this program it's actually just called the moving average. So click on that one there, it's appeared over here on the top. And what we can see here is if we hit the options and just go into the input section, we're looking at length. So effectively this is a 9-day moving average. What we typically use when we're using moving averages is different, I suppose, sets of intervals. So we might use a 20-day, a 50-day, a 200-day, for instance, and it will give us different results. So if we put one down for a 20-day, that is effectively the 20-day moving average. And what you can see is that the price has been steadily increasing over time on average. It's dipped below this moving average and it's actually come back up, oddly enough. And effectively what we want to do is not just use a single moving average in order to make any, I suppose, stock predictions or anything like that. What we want to do is add another one in. So basically what we're going to do is grab another moving average, click that right there, it's appeared in here, it's 9 days, we need to configure it, and we want effectively another interval in time. So one that's commonly used, as I said before, is the 20-day, and this can be compared to the 50-day, for instance. Let's make it a completely different color so that it's very obvious what ones we are looking at. So there's our orange one right there, and as you can see, obviously it's over a longer period of time, so we're not seeing it as closely linked to the current price. Now, what we're looking for when we're looking at these moving averages is a few different things. The first of which is, where is the current price sitting versus the moving averages? So for instance, if the price increases above the 20-day moving average, that is typically bullish. If it goes below, that is bearish. If it bounces off, it's bullish once again. And if we see it dip below, for instance, a longer period of time moving average, such as the 50-day, that confirms that significantly more. Effectively, if it drops below the 50-day moving average, that confirms that we are in that downtrend. So it is a much more significant meaning. Now, also when you're looking at these moving averages, what you want to look for is the golden cross or the death cross. So the golden cross is when the I suppose shorter term moving average goes across and above the longer term moving average. That indicates that there is a long-term uptrend, or just an uptrend in general, I suppose, and vice versa. If this blue line, the shorter term moving average, dipped below this orange line, which could be potentially happening soon due to the fact that they're getting a bit closer, if it drops below, that indicates we're moving into a downtrend. And that's just a basic indicator that you guys can use right now in order to predict the price. And a lot of people use this as points to effectively determine their entry levels and their exit levels within a stock. If you see the golden cross where the short term passes above, that's your buy point. If that short term then goes below the longer term moving average, that is when you sell. Moving on to another different indicator, and this is one that you actually need to put in place yourself, and it is known as your support and your resistance points. And effectively you can determine your support and resistance points by looking at where the price action has occurred at peaks and troughs significantly. So for instance, what you do is you grab a line over here, for instance, and what we can see is that there's been a lot of price action at this value in general, and all the way across you can see that would typically be considered support. So basically if I drew a line there to see the price action, and the reason I'm calling it support is because The price is actually just sitting on it right now. But basically, if you draw that line, what we're seeing here is a lot of price action, and this is known as support currently. And I'll explain the difference between resistance and support. So resistance is where the price is below a line where there's been lots of price action such as this, and it is trying to push through it. So the price tries to get above it. It's a point of resistance. Once it gets through that point, it is then support. So effectively the price has gone up and it's going to go for the next point of resistance, if there is one obviously, or the price is going to come back down and hopefully it bounces off that support line, because that is now known as support, and then continues to trend upwards, or if it breaks through that support, this then becomes resistance once again. Now, if we continue to look at the current chart, let's just move you out the way there, mate. All right, if we continue to look at this chart here, how can we determine the effective next point of resistance? So the price is currently sitting on the support. Where's the resistance? Well, let's look at the price action. Not much has occurred in the past, so there's no, I suppose, historical point. If there was a historical point, we could use that. This is uncharted territory, but what we want to look for is where most of the price action has occurred. And it looks like this point all the way along here, price action has occurred. So we're in, I suppose, a channel effectively. And what we can do is one of two things. I can draw it manually, or I can come in, grab this, and what we can do there is see this is likely a trading area. What we want to see now is the price break through this point up here in order to it continues its trend. Now, when we are talking support and resistance, it doesn't always have to be in that horizontal manner. What we can see is based on the current trend, there is support and resistance points. So if I start drawing some lines here, what you can see is what we've got here is basically the long-term uptrend and the support that is established. So you can see this is where the price has touched on multiple occasions over the period of these trading days. And basically what that indicates is that we've got a trend here, and we can do the same thing where we grab this and we copy it, paste it. Let's see where the rest of the trend fits. Hopefully it's in a parallel line. If it isn't, that's all right as well. Probably roughly about there is exactly where it fits, because what we can see is it keeps hitting these price points consistently, and we can see this is like a false breakout above the top resistance point. It's gone back down into this range. It's tried it again. You can see as soon as this line was broken on both occasions, it has shot up significantly in value. And that's due to the point that it's a breakout. It's breaking through that resistance, so there's momentum behind it. But it has come back down, and you can see now it's bobbing back and in and out of this range. Basically what we're looking for is the trend. If it goes above, we're continuing in the direction. If it's going horizontally, I suppose we're continuing as well. If it goes below, that is when the trend could be changing, and we have to get other indicators involved in order to understand whether that is the case or not. Okay, so we're still sitting on the same chart, but I want to show you some other indicators that you can use outside of the actual chart itself in order to effectively determine the price action that's going to occur. So if we go into the indicators section and look for something called the Relative Strength Index, also known as the RSI. So I'll click that one right there, and it's appeared just at the bottom here. And effectively what we're seeing here is the strength of the stock, and you can see these values on the right. That's effectively the ratio. So what we want to see here is a couple of different things, and effectively this helps us determine if a stock is overbought, oversold, or just right. So this purple area is the just right area, and effectively we're hoping that the price stays within these bounds. If it goes below, that actually indicates there is an opportunity to buy shares. And the reason for that is because it is oversold if it drops below this 30 mark right here. So you buy shares and the price is likely to rise. Vice versa, if it goes above this 70 mark, it is likely to drop in value due to the fact that it is overbought. And as you can see, Typically when we have a surge in the stock price, we can see that it goes up and above, but it always has to come back down into this purple range here. And it's gone back up, it stayed just there for a little bit, gone back down again, and we can see a bit more normality coming into it. And we're in a pretty good spot now. So the price isn't oversold, it's not overbought, it's sitting at about just right. And effectively, if we combine this with other factors, we can determine the volatility of the stock in either one direction going up, another direction going down, or if we're unsure when it's sitting in the middle, it could go either way. Now here's another similar example, and this is something called Bollinger Bands. And effectively what this is showing is the volatility of the price. When the bands, these two lines, are far away from each other, the stock is extremely volatile. When these bands are close to each other, such as over here, you can see the stock is well and truly coiled and it is not volatile. Effectively what we've seen is consolidation, then a breakout of consolidation. So for instance, if you see a price chart like this and you can see, okay, it's going in that direction and starting to go horizontal, typically these lines will start coming close together. And when they do come close together, typically what you see is either one of two things. The price is either going to break down or it's going to break up. Due to the fact that it's coiled, it's consolidated, and consolidation basically just means that the price action hasn't varied too much. It's trading within the same range over an extended period of time. Now, consolidation is typically a very good thing when in an uptrend, because effectively what it means is that the price is forming a solid base for the next move up, or the next leg up, whatever you want to call it. But it provides a solid point of support, which is critical. Now the key point to note here, guys, is one indicator is not going to be enough. What you effectively want to do is take multiple indicators and combine them in order to make a decision. Rather than just relying on the simple moving averages, for instance, combine that with the RSI and the Bollinger Bands to understand whether or not the price has coiled and whether it's ready to go for a run, if it's been oversold, overbought, if it's consolidated. All those things indicate what your decision should be. Not one is going to be your be all and end all. And as well as that, some indicators just don't work for certain people. Some charting patterns don't work for certain people. There's obviously hundreds and thousands of different indicators, different methodologies, different strategies. It's not going to work for everyone one thing. And effectively what this means is learn as many as you can, test them, try them, understand them, work out what ones work for you so you can make more informed trading decisions on the fly. The more you practice, the better you're going to get at understanding them. And that wraps up today's video, guys. If you're interested in seeing a lot more technical videos in my trading guide playlist, I cover a lot of different things, including some different charting patterns which are a bit more advanced. If that's something that interests you, go and check that out. If you did enjoy today's video, please remember to give it a thumbs up. It helps me out so much, guys, and subscribe for more content. As well as that, I'd love to know your thoughts and some of the indicators that you guys currently use in your trading or investing endeavors. And with that, guys, please have an awesome day. I'll see you next time. Cheers.